We're gearing up to launch Season 2 of Baker Briefing next week, so right now the podcast is taking a short break. But we're excited to share the latest episode of The Two-Handed Economist. That's a podcast hosted by John Diamond, the director of our Center for Tax and Budget Policy. On this episode, John explores three major economic developments from the past week: a federal appeals court ruling that struck down Donald Trump's sweeping tariffs, and new job numbers that show an increasingly fragile labor market. John breaks down what all this means and how a reversal of Trump's tariffs, if that happens, could help the Fed rescue the economy. We hope that you enjoy the episode and that you tune in for our Season 2 teaser episode coming next week. I'll be talking with our podcast producer, Karina Zemmel, on the challenges of communicating policy and what's ahead for the podcast this season.
Welcome to the Two-Handed Economist. I'm John Diamond from Rice University's Baker Institute. This show is about exploring every angle on economic issues that matter. We're not here to repeat sound bites. We aim to give you the full picture. Today is Wednesday, September 3rd, and over the weekend, everything changed. Well, not yet, but it may if the Supreme Court upholds the 7-4 decision regarding tariffs of the Court of Appeals for the Federal Circuit. Let's discuss the impact of the court's decision. Let's also discuss the executive order suspending the de minimis exemption. And let's look back at the momentum of the U.S. labor market and where our concerns should be placed. Let's dig right in. Starting with the trafficking and reciprocal tariffs, on May 28, 2025, a three-judge panel of the Court of International Trade ruled that the Trump administration had exceeded its authority under the International Emergency Economic Powers Act. This ruling found that both the reciprocal tariffs and the trafficking tariffs exceeded the president's authority under the International Emergency Economic Powers Act, and it permanently enjoined the government from imposing these tariffs. The government appealed both cases the same day and moved to stay the injunction pending appeal. On August 29th, the Court of Appeals for the Federal Circuit ruled in a 7-4 decision that most of President Trump's broad tariffs are illegal.
We're getting some breaking news into us right now. A federal appeals court has ruled that most of the global tariffs that President Trump has put in place are illegal.
The Court of Appeals for the Federal Circuit has decided that the government's use of these what they call emergency authorities to try to tariff essentially every country around the world on a bilateral basis are not legal. And that would imply that they are going to strike them down, which would be really impactful for the 70 plus or so countries that the United States memorably over the past few months has been implementing these case-by-case tariff rates.
The court stated the following: "We are not addressing whether the president's actions should have been taken as a matter of policy, nor are we deciding whether the International Emergency Economic Powers Act authorizes any tariffs at all. Rather, the only issue we resolve on appeal is whether the trafficking tariffs and the reciprocal tariffs imposed by the challenged executive orders are authorized under the International Economic Powers Act. We conclude they are not." That's a quote from the legal finding from the federal court. However, the court has stayed the ruling, allowing the tariffs to remain in effect until October 14th, giving the administration time to file an appeal with the U.S. Supreme Court. If the Supreme Court upholds this ruling, the U.S. may be required to refund tens or even hundreds of billions of dollars in tariffs that have already been collected. In addition, it would reduce the collection of $300 billion in tariffs each year going forward, thus raising serious fiscal concerns about the government's fiscal position. Market reaction was swift. Wall Street fell immediately by 1%, and long-term Treasury yields rose, reflecting the rising volatility and fiscal uncertainty that surround the ruling and the tariffs in general. The administration has already suggested that they have other options, such as invoking Section 338 of the Smoot-Hawley Act and using other methods to defend the tariffs. However, Section 338 only allows for a 5-month extension of the tariffs, and so it's not clear exactly what the administration has up its sleeves, but it is clear that this is increasing the uncertainty that businesses, consumers, and other entities face in the U.S. economy. On the legal front, the decision reasserts the constitutional boundary between executive and legislative powers, especially over tariff-setting authority. It sets up a high-stakes showdown if the case proceeds to the Supreme Court. Trump denounced the ruling on Truth Social, warning of dire consequences if tariffs are revoked.
Trump posted on Truth Social saying that without tariffs and all of the trillions of dollars we have already taken in, our country would be completely destroyed and our military power would be instantly obliterated. He criticized the majority of the court's judges while praising one dissenting judge appointed by former President Obama.
Though many analysts emphasize the legal precedent for stronger checks on executive powers, other players in the administration have made claims that this could be the end of the United States, or other catastrophic claims about how this will impact the economy. I don't buy any of those arguments. In fact, there could be a silver lining. The appeals court ruling striking down Trump's tariffs injects major uncertainty into U.S. trade and fiscal policy. With the decision stayed until mid-October, and a likely Supreme Court showdown ahead, business and markets may face weeks of ambiguity over tariff rates and refund liabilities. Investors are already pricing in higher risk, with stocks sliding and long-term yields climbing as the possibility of tens of billions in repayments looms and the loss of $300 billion in tariff revenue in the future goes away. But as the U.S. economy slows, and it seems to be slowing at an increasing rate, as the momentum is falling, if the tariffs are ruled illegal and are removed, that opens the door for the Fed to reduce rates aggressively in response to a slowing labor market. This could be the silver lining that actually saves the U.S. economy, as opposed to the Trump administration's claims that this is going to wreck the U.S. economy. On another front, the president issued an executive order suspending the duty-free de minimis exemption for all countries. The change took effect on August 29th, 2025. And applies to all imports.
There's a new tariff rule that just kicked in, and it is rippling around the world. This one is targeting cheaper goods that many Americans buy online. President Trump's executive order ends what is known as the de minimis exemption. And for decades, it has allowed packages that are valued at less than $800 to enter the country duty-free. U.S. Customs and Border Protection numbers show de minimis shipments account for 92% of all cargo that enters the country.
It also prohibits imports made with forced labor. This marks the end of a policy allowing shipments valued at under $800 to enter the U.S. duty-free. Note that the de minimis exemption is a long-standing policy, but the value of the exemption has risen from $5 in 1994 to $800 in the last 3 decades. The U.S. de minimis threshold was raised from $200 to $800 in March 2016, when Congress passed the Trade Facilitation and Trade Enforcement Act. The act was signed by President Barack Obama in February of 2016. This shifted the policy from a tool to make the customs process more efficient to a tool to expand free trade. The administration cited 4 key reasons for suspending the de minimis exemption. First, closing a catastrophic loophole that is exploited by low-cost sellers to evade tariffs and oversight. Second, enhancing national security by helping curb the influx of fentanyl, counterfeit goods, and other illicit items. Third, leveling the playing field for domestic manufacturers who contend with unfair competition from duty-free foreign goods. And finally, securing billions in additional tariff revenue, estimated at up to $10 billion annually. In recent years, low-value shipments of duty-free goods have surged from roughly $134 million in 2015 to over $1.36 billion in 2024. That's over 4 million packages per day, many of them bypassing duties and formal customs inspections. By suspending the exemption, the U.S. is demanding full tariff compliance on nearly every imported parcel, introducing new entry requirements, duties, and logistical hurdles. Global postal and shipping systems have reacted swiftly. At least 29 national postal operators, including from Europe and Asia, have paused or suspended shipments to the U.S., citing compliance disruptions. How will this affect you? Well, prices will rise for many low-cost imported goods. Goods that were previously shipped duty-free are now subject to tariffs ranging from 10 to 50%, or temporary flat fees of $80 to $200 per package during the next 6 months. For example, imports from platforms like Shine, Temu, Etsy, and eBay will be directly impacted. Delays and canceled shipments should be expected given the confusion about the new customs procedures. All in all, this is going to raise prices and reduce how far your income stretches. However, the argument that this will create a more balanced and fair trading system across international borders should be considered. But maybe instead of suspending the exemption, we should return to a much smaller exemption like we had before 1994. Finally, the labor market's soft spots are increasingly visible, and they're becoming more and more of a concern.
Well, the JOLTS numbers come in a little bit lower than anticipated, which I suppose is good news in a way. It suggests maybe the unemployment rate isn't going to move as much. 7,181,000 jobs openings. Now, this is for the month of July, not for the month of August. Friday, we get the August payrolls report. Last month, which would have been June for JOLTS, 7,437,000. So we have seen a decline, but it's still a fairly strong rate. This was about where we were, maybe a little higher than where we were before the COVID sort of upset the apple cart.
Recent college graduates face unemployment rates above 6%, which is the highest in years, with underemployment exceeding 40%. Black Americans' unemployment rate has ticked up to around 7.5%. Meanwhile, nearly 1 in 4 unemployed workers has been jobless for 27 weeks or more, underscoring the rise in long-term unemployment that risk scarring earnings and participation rates for many workers. Economic momentum is slowing quickly. The latest NIPA data showed that tariffs are starting to raise prices, and it's leading to slower growth and further causing the economic momentum to shift downward, risking what we all want to avoid, which is the R word, the recession. If tariffs are removed, this opens the door for the Fed to cut rates aggressively and hopefully offset or get ahead of what is a slowing economy that looks to need some economic support. So to close, let's recap the issues that we've discussed today. First, the appeals court striking down Trump's tariffs injects major uncertainty into U.S. trade and fiscal policy. With the decision stayed until mid-October and a likely Supreme Court showdown ahead, businesses and markets face weeks of ambiguity over tariff rates and refund liabilities. Second, suspending the duty-free de minimis exemption will raise prices for many low-cost imported goods. Consumers can expect delays and canceled shipments, given the confusion about the new customs procedures. Finally, the labor market soft spots are increasingly visible, and they're becoming more and more of a concern. The latest NIPA data showed that tariffs are starting to raise prices, and it's leading to slower growth and further causing economic momentum to shift downward. That's it for this week's episode of The Two-Handed Economist. Thanks for tuning in. The Two-Handed Economist is a production of the Baker Institute for Public Policy, recorded on the campus of Rice University in Houston, Texas. Production support was provided by Sharon Moriarty, Kevin Young, and Karina Zimmel. If you like what you hear, leave us a review. It helps other listeners find the show. Until next time.